All right, will the Federal Reserve statement and decision help or hurt dividend stocks? Welcome to Trading Nation. I'm Brian Sullivan, Boris Schlossberg with BK Asset Management, Craig Johnson with Piper Jaffray. Craig, I mean, listen, pretty much 100 out of 100 dentists surveyed agree that the Federal Reserve is going to raise rates in their policy decision on Wednesday. Do you think that and maybe a hawkish statement will bring down the dividend stocks?
Well, Brian, there's a couple things, but that's a great question, and there's a couple things that we've been thinking about. The first chart we brought in the high dividend yielding index from Moody's, MDYF. And it's interesting is that we have seen 10-year bond yields come down about 20 basis points. That index has gone and been very, very strong. Now, that index having gone up, 10-year bond yields having come down, really tomorrow's statement is going to come down to, for us, do we finally see the long end of the curve start to move up or move down? From my perspective, I think we're going to see 10-year bond yield finally move their way up. And if that is indeed the case, I think that's going to be a negative for higher dividend yielding paying stocks. And so from my perspective, I would think that you're going to see those lower tomorrow, and you'll probably see the inflation stocks, which have been starting to catch a bid, probably carry on higher after the Fed meeting announcement.
Wow. So, but you are, Craig, just one more to you. You are bullish on equities overall, but you're just so a little more cautious on the high dividend payers?
Yes, I am, because I ultimately think that as rates go up, the attractiveness of some of those high dividend paying stocks probably will wane a little bit as people can come back and look at other equities that have not done as well. Perhaps some of the value stocks get a little bit more of a bid post the announcement.
Boris, what's your view? I'm thinking utilities maybe in the tank, but utilities have shocked and amazed and not sold off as much as some people had thought.
No, they have not, because I actually think the data tomorrow, the CPI data, the retail data ahead of the Fed is going to be soft. I think the Fed is going to have a very, very hard time making an argument they require another rate hike before the end of the year. The market remains incredibly skeptical. Fed funds futures only give a 40% chance of another rate hike beyond the one that they're going to have tomorrow. And if that's indeed the case, if the dot plot looks like they may push everything out to 2018, yields on the 10-year actually go down further. That puts money back into utilities and all the high yield dividend stocks, because the need for yield will be keeping those equities up. And I think that's going to be the story as we go forward.
Well, we should find out. We got the Federal Reserve decision around 2 o'clock Eastern time. We'll, of course, have it live in the reaction on CNBC. Craig and Boris, a pleasure as always. Gentlemen, thank you.
Thank you.
Folks, thank you for tuning in. As always, I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.